For nearly 2 decades, these two lines were moved in unison until something broke right here. The black line is the S&P 500. And as that has gone up and down, so too has this other line, job openings. It made perfect sense. When companies grew, they hired more people. But in 2022, that relationship broke down. Since then, the S&P 500 has soared by over 70%, while job openings have fallen by around 30%. This gap shows two completely different stories. One where investors are celebrating a new golden age, and another where the real economy is shrinking. Most people would look at this chart and blame artificial intelligence, and that's because ChatGPT came out right here in November 2022, right around when these two lines began diverging. So, at face value, this chart seems to indicate that our biggest fears about AI taking all of our jobs are already becoming reality. But there is a massive hole in that theory, and it has to do with timing. If we look closer, labor demand peaked and began its free fall in March 2022, 8 months before the release of ChatGPT. The decline in job openings didn't start with the surge of artificial intelligence. It actually started with the Federal Reserve. The culprit becomes obvious when you overlay the federal funds rate. You can see that right at the peak of the job market in Q1 2022, the Fed began the fastest interest rate hiking cycle in decades. They raised the rate from the near zero post-pandemic lows all the way up to over 5% by August 2023. They did this to tamp down on runaway inflation, which had gotten totally out of hand after all the economic stimulus meant to revive an ailing economy during the pandemic. Inflation reached 9.5% by summer 2022, and the Fed intervention worked. Inflation began to fall immediately, and the economy cooled off. And this explains why job openings began to fall in March of 2022. When rates go up, borrowing gets expensive. Companies stop expanding. They pull down job postings. Therefore, this crash in job openings isn't a disaster. It's exactly what the Fed expected to happen when they hiked rates. Since the Fed began hiking rates in spring of 2022, job openings declined from a peak of 11.5 million down to about 7 million today. In many ways, this is a stealth win for the Fed. They deflated a bubble without causing mass unemployment,